Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as you can see, I've left my lines on the chart from last week's report so you can once again see the accuracy of technical analysis and how reliable it really is. Last week I mentioned that there would be a good chance we would break over this resistance area. I drew a forecast line that was just a short diagonal line right there representing the breakout that I had anticipated, and lo and behold, look at that, the end of the line comes right within pennies of the highs that we've reached this week. And although the market is up, the diamonds gapped up. You'll see if I zoom in a little bit further, you'll see that there's a small gap here. We gapped up Wednesday on fairly high volume, but what's happening now is the volume is dropping. And when the volume is dropping while price is going higher, that tells us that the buyers are losing some of that momentum. So my forecast for next week is going to be a pullback from that high to retest what is now going to be a new support level. So that's my forecast. I'll leave that in place for next week's report so we can check back to see once again how accurate the technical analysis really is for candle charting. Now if I look at the spiders, that's ticker symbol SPY, it's the S&P ETF, you'll see that again my lines are in place. I said that we would move up to test resistance. I thought there might be a possibility of a brief breakout. We did that on Thursday, but it really didn't have any kind of volume behind that. And now that we're at that resistance point, once again you see the volume dropping. So I'm going to erase this line from last week's report and draw the new forecast and what I think is going to happen for next week. I think we could very easily pull back from that resistance line and move towards testing this newly established support level right here, right around the 204 level for the spiders. Now if we look at the Russell 2000, ticker symbol RUT, you'll see that the market moved exactly as I said it would. It would move up to the existing downtrend line right here, and I made that little hash mark there suggesting we would pull back a bit. I think that's exactly what's happening this week as we speak, and I'm going to continue that line lower for a forecast next week of a possible pullback in the Russell 2000 to this support level right here. So I'll clean the chart up for you just a little bit. I'll leave that line in place. I'll get rid of this existing horizontal line which represented a former resistance line. We'll take that off, and this is what we're working with right now. Now if we look at the Qs, that's a tech sector, QQQ, through what we call the power shares, you'll see that the lines are in place from last week. I said we would move up to test resistance and fill that gap. We did just that. I think what we could see for next week is just like what I've described in the previous markets, where I believe we're going to pull back a bit in the NASDAQ. I'm not saying we're going to collapse by any stretch of the imagination, but I think we're going to see a pullback, and that is where the bears are going to start to move in, and maybe we might even see profit taking selling by those who bought in earlier in the month. So that's for the Qs. Now finally the VIX, it's ticker symbol VIX, which is the volatility index for the S&P. You'll see that my forecast was that we would go lower in the VIX, and that's exactly what we did. You can see how well the lines stayed in place, and it's almost as though the VIX followed the line that I drew last week. Of course, that's impossible for people to see my charts around the world exactly at the same time, but the VIX has pulled back, and what I think is going to happen for next week is I think we're going to bounce off of that support level, and I think the VIX is going to go higher because remember, this is inversely related to the S&P. So if the VIX goes up, the price of the S&P will drop, and that's exactly what I forecasted just a little while ago. And I think the VIX will bump its head against this resistance line, so I'll leave that in place. and I'll remove the former resistance that I had a couple of weeks ago. Now, if anything that I've said seems foreign to you, don't worry. We take people by the hand, we instruct them, we educate them on some of the terms that we use, particularly with regard to candle charting. If you'd like to learn more about what we do, we have an open house session this coming Monday at 8 p.m. Just go to themarketguys.com. You'll see right on the front page there's a link to register for the open house. Just click on that link right there. It will bring you to the open house Q&A registration page, where all you have to do is fill in your name, your email address, your city and state, and you will be reminded of that event this coming Monday. It is free. It's open to the public. You're more than welcome to invite friends, family members, and we're going to have an action-packed hour of stock analysis and answering your questions. So have a great weekend, and we'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.